Good afternoon, everybody. Welcome, welcome. Welcome back. Whew, what a long weekend. Got some time to rest and spend some time with the family and all kinds of fun stuff. I hope everyone had a great holiday season. Spend some time with the family, spend some time with friends, whatever you do on holidays. Fingers crossed you had some fun. As always, before we jump on in, make sure to swing it over to slingshotfutures.com, scroll down, and click on a couple different things. First of all, to register for our newsletter, you can find the link right there. That's the newsletter registration link, and that's going to allow you to sign up for our newsletter email list so you'll be notified every time one of these videos comes out. Along with that, in the email, we talk about a bunch of stuff that we just don't have time to talk about in the video, and that's going to be everything from, anything that's moving, really. Stocks, crypto, options, you name it. If it's moving, it'll be in there for some possible trading ideas and things to keep your eyes on, so make sure to sign up for that if you haven't done so already. Of course, if you want to give us a little bit of a trial and see what all is going on and how we approach the markets, head on over to the 3-day trial link right there. From there, you can register for a free 3-day trial in the room. You can hang out with us for a couple days, see how we approach the markets, see how we trade the markets, and just generally kind of get an idea, dip your toe a little bit into the fun and fast world of how we trade markets. So, outside of that, as always, generally speaking, we want to take a look at what's going on for the week. We want to see what news we're looking at and kind of expecting for tomorrow's action. Now, in terms of tomorrow's price action, we don't have a ton of news. We do at least have some news for tomorrow. Today we didn't have any news. But tomorrow we have 4:30 UK news. That's the GDP coming out month over month at 4:30. At 4:30 also, we have the manufacturing production month over month for May. So we've got a couple numbers coming out of the UK at 4:30. After that, at 5 o'clock, out of Germany, we have the ZEW economic sentiment for July, forecasted at -18. The previous is -16.1. So we'll see what that comes out as. And then for the U.S., we don't have anything until 10 o'clock. It's the only news announcement that we have for tomorrow's U.S. trading session. That's the JOLTS job openings for May. It's forecasted 6.583 million. Previous is 6.698. And that's it. So coming back from the holidays, have a little bit of a kind of a calm period in terms of news. We didn't have any news today, which is kind of a nice thing coming back from a long weekend. It isn't always so fun to come back and all of a sudden it's everything straight to the wall, and goes a little bit crazy. So good to see a little bit of a break there in terms of, on that side of things. So overall, looking at the markets, we've got a couple things that we can keep our eyes on. First of all, obviously, we have the 4-hour charts, our favorites. If we look at the euro is grinding its way lower. And the grind down that we're seeing is running out of steam, right? In the grand scheme of things, this is still a bearish move. They still have a bear tendency, but they're rallying against that quite a bit. And one of the big areas that we were watching was this range that the market was stuck in for a very long time. It finally broke above it, even used it as support, and then went flying higher. We're now coming into the highs of the wedge. And this is where things really start becoming kind of yes or no. This is the line in the sand. Is the market going to break out above this and then bounce and continue on its merry way to the upside? Or is this more looking like it's going to be a potential failure? Right now, it's not looking so great for the buyers. If we look over here at this most recent attempt at the highs, we had a huge blow-off bar. No surprise to see some profit taking, considering it smacked directly into the highs of the channel. They then attempted to carry on and break out through those highs, which completely failed. It was a complete failure on the highs. They couldn't get anything going above there, and now we're seeing a turn back down again, showing that the sellers may give this another shot. Now, we do have support on the euro, which is being tested. That's at 18.015, and that's right now kind of the last line of defense for the buyers, because if that breaks down, we've got a whole lot of open room until we come back down to that range retest. Now, is this a situation where the market's going to go crashing down and we're going to enter a perma-bear market for the rest of eternity? No, but this is likely kind of fading off of the highs of the range. We have had a lot of signs that the buyers have been coming in since the lows. This miss on the bottom here, a higher low, they're not breaking down, right? So we know that a lot of sellers, at the very least, are stuck in this move that are hoping that it pulls back so they can get out. And very likely, they're going to try to position themselves so that their average is on a retest of that range high, so they can exit at around a break even or maybe a small profit on the retest of that range. Which means that my anticipation is that I'm expecting to see this pullback to retest the range at 17,500, likely because everyone's positioning that's stuck on the short side. At least they're trying to position for their averages to be right around there so they can exit, since the shorts just haven't really been working. Now, here's a little bit of a caveat. A lot of times, what you're going to see when it comes into those areas is you're going to see a situation where you have that break-even point, right? Sellers sold here, and you get the idea. I'm not going to draw the candles because I'm not that great at drawing, but you have the move down. Sellers try getting the continuation. It fails. It tries going again. It fails. It tries going again. It fails. And it runs into a major level of resistance, in this case, the channel highs. When we run into a situation like that and they're showing signs of failure on the top now, we have to understand that there are going to be sellers who have been selling from here, they sold back here, they sold back here, and they're just trying to get the market to roll back over. Their primary objective initially was to get down to a new low and continue on, but that didn't work. Went a little bit higher. Now their objective is probably a higher low, maybe a trap of this previous swing, but that didn't work either. Now they're starting to average in to mitigate their losses, trying to bring their average up so they can exit, but it comes down and just misses that average point and goes back up again. So what are they going to look to do? Well, they're probably going to sell more and try to bring their average up to a structural area of interest, and that means that when it comes back down to the earlier range that was over here, they can now make just a little bit of profit, probably enough to cover the commission before it starts bouncing again. And at that point, that's where it becomes do or die. Because when it comes into there, if it just hammers through it and continues lower, those shorts, they're not going to exit. They're going to hang on to it because now that it's broken down through there, they can use that as resistance again. And if it comes back, their primary objective is down at the lows. And that becomes then the huge area of interest. However, if it doesn't break down, and it'll happen quickly, if it doesn't break down and starts holding that as support, they're going to begin exiting on any sign of weakness from the sell side, and that should cause a strong rally to the upside. And that means that we're kind of in a balance point. The market coming down makes sense right now, seeing failure on the highs. I'm sure almost guaranteed there's some form of divergence up there, probably stochastic at the highs. It would make sense to see a lot of sellers trying to push this market down to get back towards those ranges. And if that range, again, breaks down aggressively, then we can look for continuation to the downside with a primary objective back to range lows. If it doesn't break down, though, there are going to be a flood of sellers exiting, which will probably cause a rally up into a major area at 19,055. We'll have to wait and see. Right now, though, I am leaning on the sell side, anticipating the overnight session, or at least the rest of the day going into tomorrow, to try to continue down. So that is what I am waiting for here. What I would really like to see on a more zoomed-in time frame would be a breakdown of the support, a retest as resistance, and continuation lower. I think that would be probably the best way to play it, because that kind of sticks your risk relatively easily above that bear candle high, because if that breaks, you're wrong. It's just the way that it is. Otherwise, though, looking pretty good for the euro to the downside, assuming that it is going to continue a little bit lower, at least into the overnight session. Over on gold. Gold got a little bit overzealous down here, blew off the bottom, and couldn't keep it going. They ran out of steam, and now we created a situation that we are seeing a heavy correction back up. That corrective phase back up will likely find, at some point in the future, the highs of the channels and potentially even a breakout above that. Now, the reason that is, when you have a channel that has a breakout move, and we actually talked about this in our most recent channel tutorial, so make sure to check that out on our YouTube page. But that is one of those situations where we have an overzealous break through the lows of a bear channel. That is unsustainable movement. Markets can't typically hold on to it when it's already a bear channel and then it breaks lower. It's kind of like a final right? It's finally done. Everybody exits. They take their profit and causes an aggressive bounce back up. That is exactly what we're seeing right now. Now, does that mean that the bear trend is over? No. But what it does mean is that we're probably going to see a corrective phase back up, and that corrective phase usually equalizes the lows. Now, what I mean by that is the break through the lows of the channel will usually, that distance, be the break through the highs of the channel. So that's really what I'm waiting for. In the long term, over the next, probably through July, we're likely going to be in a slight bull market. Now, it's going to be weak, but a light bull market to the upside, looking for the highs of the channel and a breakout above the channel highs. Now, again, is it necessary that that happens? No. Right now, we're probably setting up some form of a MACD divergence, showing that sellers are trying to come back in with a heavy pin bar on the highs. We've got a lot of resistance at the 89 period moving average. We have a 618 reversal area at 1268.5. There's a lot of stuff up here that could push the market back down again. But This is the difference. Because we've blown through the lows of the channel, if the market does make it back down, we're very likely going to find a huge amount of support, not at the lows, but ahead of the lows. The previous swing low before the exhaustive breakout. And that's going to create a monster area of support at 1246.9. So that is an area that I am definitely keeping my eyes on. If it does manage, and it is possible, low probability, but if it does manage to break through that 46.9, it is going to be a ridiculous level of support at the lows, probably with a slight offset. I don't even know if I really want to go 10 ticks underneath. I might just go 5 and say 38.3, but just below that low. So all of the sellers who have been short, they sold into this move, they can sell more, they sell more, they're trying to find ways to get in. Their profit target is going to be at the lows if it breaks through this 46.9. Those are the two big areas that I'm looking at to find support to try to bounce the market up, because over this next month or so, I am anticipating a bull market in gold to try to get back to the highs of the channel for that equalized breakout above. We haven't seen the buyers prove that yet, so we have to play both sides. Right now, I am more on a short side bias. Even though I do think that this is going to go up throughout the month, we have a very strong signal from the sellers that they're going to at least try to break it down. So I will be looking for the short side going into tonight and tomorrow, and then maybe if we can get down to this 46.9, that would be really nice to see tomorrow for some potential bull bouncing back up. Over on crude oil. Crude oil had a fun ride here. We're in a wedge right now, but namely, the big thing that we really kind of pinpointed was this area of support down at 72.18. Absolutely nailed it there. Bounced off, went through it by just a fraction. I don't know how much it went through, but not by much. Low was at 14, so it went through it by 4 cents before rocketing all the way up another $2. So a huge amount of bull emphasis coming in on crude oil, trying to get that move back up. The problem is that we have falling resistance on the wedge highs, and the market's going to need to break above that for the buyers to prove anything. And even if they are able to break above that, it's a pretty stiff level of resistance above us in a couple different places. They're going to have a hard time. So even though crude oil is obviously in a bull market right now, I don't think anybody needed that clarified. We've been doing it since June. That's been rocket shipping up. And that said, it's been bullish. I mean, what, 2017, mid-2017? Hasn't really stopped going up. So with that in mind, a pullback would be pretty nice. And after such a massive rally to the upside, a lot of times what traders are looking at, because there's not a whole lot of structure to work with when it breaks away that aggressively, they're going to be looking for any form of a trap area or, I mean, heck, even a 5 or 10% pullback might be all it takes. They're just looking for something that's a little bit cheaper. And that little bit cheaper was right there at 72.18. Now from here, if it does end up pulling back again, now we have a higher low scenario that could definitely come into play. And it's going to be at 72.49 and 72.73. Those are the big areas going into tomorrow's trading that I'm looking for support. We are in a wedge right now with falling resistance and descending support. This is a descending wedge. Everything is pointing down right now. Now, that by itself isn't that big of a deal, because if this can break above that, pull back and continue, we're just on our merry way back with a bull trend again and like nothing happened. But the one thing that I do want to keep an eye on, just like we were talking about with channels, we have a descending wedge. If a descending wedge breaks lower, it's very likely going to be unsustainable movement. So that means that if we can break through the lows of this descending wedge, that is going to be a monster buy zone to try to kick the market back up towards those highs. For right now, it's stuck smack in the middle. There's not really much we can do here. We have to kind of wait until it gets to some area of interest, whether it's the extremes down at 72.18 or 73 or 49 or any of those, or if we get a breakout of the highs of the wedge. Where it stands right now, I'm not really looking to do much, more likely just sitting on hands waiting for some of these levels to test, and then we can go from there. Primary objective to the upside would be the high of the wedge if it pulls back first. Get out at the high of the wedge, then looking for a breakout move up to 74.78. Find some resistance there on profit taking for a pullback, then another attempt to buy and rally up to a new high. That's kind of the game plan. That would be a perfect scenario, because then you'd have 3 different opportunities to trade. Might not get that perfect of a setup. The markets rarely ever end up being absolutely perfect, but that would be the likely, best scenario if it gives it to us. For right now, though, we're in the middle. I'm not looking to do a whole lot on crude oil until we get to one of those extremes. And then we have the S&P. The S&P, holy cow, this thing just went absolutely flying today. The index markets opened up with a new breath of optimism, and the markets went flying higher. Well, except the NASDAQ. That did eventually kind of catch up. The NASDAQ was kind of a little bit brutalized in the morning. We're dealing with a situation where traders are coming back from the holidays. Everybody's all rested up. We're getting a really aggressive push. We ended up going into the weekend for the holidays with a big spike higher. So a lot of bullishness going into the holidays. Everyone's pumped because their portfolios look great when they head out on the yacht. They come back and it's still looking good. Hey, let's buy some more, right? Everybody's all optimistic and we get a nice rally to the upside. But there are a couple problems here. We are running into 618 resistance at 81 3/4. We have a major high area of resistance at 27.97. Of course, big round number at 2800. And then we also have full deviation movement up, right? This overall range deviated higher. That is one standard deviation up from the range, and that gives us resistance at 2802.50 if you round down. Now, am I anticipating the market to come crashing back down? No, that's been off the table for a while now. But the thing is, we've got a lot of areas that buyers are likely going to be looking for profit taking. Now, that's nice because when you have such a strong breakaway move, profit taking is really all that creates a pullback. So we're going to need to see some profit taking come in, give us a pullback to work with, and then jump on board for a rally back up towards the upside, targeting 27.97. Could look at 2800, but I'm not a huge fan of putting targets directly on top of big numbers like that. Almost never works in my favor. So just ahead of that, 27.97 makes a little bit more sense. See if it can kind of keep that rally going. Now, if we look across the board at some of the other indexes, because I am anticipating this to be a bull continuation. By the way, just a slight side note, the S&P does have new support at 72 1/4, but something to keep an eye on. Looking at some of the other indexes, the Dow is also rallying higher, not as aggressively. The Dow is probably the weakest of the bunch when we're looking at them, because if we look at the S&P, very strong rally up. If we look at the NASDAQ, very strong rally up. On the Dow, it's okay. That could be kind of a nice thing, though, because if the Dow does end up catching up, it's got a lot further to go, and it'll probably do it pretty fast. So that is a potential correlative type of play for buyers on the Dow to try to shove the market higher. But as it stands, the Dow is the weakest link out of all of them, breaking out of the range and looking for continuation up. We have broken through resistance at 655. Next resistance is at 777. Would really love to see it get up to that 24,925. Over on the NASDAQ, it's already tested the 618. It's already pulling back. We have kind of popped back into an area of interest. And one key thing that stands out here for the NASDAQ is an unfilled gap. Now, this is something that I talked about on the Twitter page as well as in the live trade room with members today. And that comes back to the fact that from the weekend, the NASDAQ gapped up. They gapped up to 72.31, or they left behind to 72.31 rather. And if we look over on the 5-minute charts here, actually, let's go into the tick charts. That's fine. We can see that they left behind an unfilled gap, and it never filled that gap in. That's a big deal, because now we have an open objective that the market has not completed yet. And it hasn't completed in an ETH, it hasn't completed in an RTH, it's open. And that usually causes some issues. Now, it's not a huge gap, which means that it could go a while. It could go months from now before even filling that gap or even thinking about it. But that is something that's always in the back of my mind. When we're coming off of a weekend, I need to keep that kind of thing in the back of my mind, thinking, okay, well, there might be a reason why the NASDAQ looks so weak today, and it might just be because they have some unfinished business filling that gap at 72.31. So normally I don't talk about the Dow or the NASDAQ or any of those. The S&P has kind of been my primary. But that said, the NASDAQ is the only one that has this situation. Might be something to keep your eyes on. Definitely interesting, definitely great to come back to with a moving market. We gotta love that, right? So that will do it for the market analysis. To give it a little bit of time for anybody who wants to type in any markets that you want me to take a look at. But for the most part, really good day. Nice coming back. Took it a little bit slow today. Kind of eased off the gas pedal a little bit because coming back from a holiday, last thing you want to do is start the new week off with a loss. So I didn't have many trades today, but had a couple opportunities that definitely played out nicely. Mostly on the stock side of things, actually. Twitter. Good Lord, Twitter. Twitter got obliterated. But I'll give everyone a little bit of time here. Type in any markets you want me to take a look at. If I don't see anything come in, then we'll wrap it up. A couple of minutes here. Well, I'm not seeing any coming in. I'm not seeing anybody typing anything, so not a huge deal. It's kind of nice to come back again a little bit more calm. Make sure, you know, and this is a good learning experience. If you came back today and you had a losing day today, look at your trading and what it was. Were you a little over the top because you're coming back from a holiday? You got to scratch that itch, right? You got to get the trades out of the way. It might be something of a learning experience, even though losing money is never fun. It might be a good learning experience to think about during the next holiday. But aside from that, that's going to do it for today. As always, underneath the video, make sure to click on the subscribe button, as well as the notification bell icon to the right of that, so you're notified every time one of these live streams or videos that we launch every day comes out. Along with that, if you have any questions about anything that we talked about, or just general questions, feel free to shoot me an email, jbrink@slingshotfutures.com. Aside from that, like we always say, doesn't matter what market you're trading, always make a plan, trade the plan, follow those rules, and you'll be okay. Until next time, we'll talk to y'all later. Have a good one. Hopefully you had an awesome holiday, and we'll see you all tomorrow.